Welcome to YellowTunnel. My name is Vlad Karpel. I'm CEO and founder of YellowTunnel and Tradespoon. And today I'd like to go over the current market conditions and also trading psychology and how to deal with events in your life or in trading when trade goes against you. This is my brief bio. I was Executive Vice President and Head of Technology at OptionsXpress from its inception through 2007. OptionsXpress was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was over $2 billion. Very proud of that experience. Shaped my professional career, gave me exposure to trading and trading psychology. Started Tradespoon and YellowTunnel. Tradespoon's been over 15 years. YellowTunnel concepts applied for as many years as I've been trading. Mentoring and teaching Tradespoon subscribers how to trade stock and options. And finally, I have master's degree in computer science. Disclosure, since I'm going to go through some trading examples, very important to read the disclosures. Trading stock and options involve risk and are not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own portfolio based on my own risk tolerance level for general education information purposes only. Also should not be assumed that the future trade picks will be profitable or will equal past performance. All right, so concept of magnifying glass. Last week I was driving on the highway and my tire blew out. I was consumed by anger. I was very upset. I missed a lot of important meetings. My whole schedule changed, and probably was upset for a day or two. Similar situation happens when I trade. This is a chart where the stock that I traded continues to go down for the several days, making new lower lows and lower highs. We're in the middle of the earnings season. I've done few earnings play, and there were two in a row that went against me. Coke 2 days ago announced earnings, and it traded outside of the predicted range. Right, it was an outlier event that happens maybe 5% of the time, and the trade went against me. And sometimes I would feel that I'm married to this trade, and I'm trying to wait and see when will Coke pull back, so my trade will actually break even or will make me some money. So what happens when you're on a tilt and you have multiple trades that are going against you, or you have multiple events in your life that it seems like the world is falling apart? I'd like to use the concept of magnifying glass and looking at the life chart. If I zoom out and look at my life or my trading experience from the long period of time, right? This is me trading in the past 20 years. Sometimes in my life there are good moments, sometimes there is down moments. Most of the time they're somewhere in the middle in terms of emotional level. If I have to plot the energy or emotions, some are very high, some are very low. Usually they're in the middle. The idea is that I personally have more good moments in my life, high moments, than lows. Trading is the same thing. I've been trading for over 20 years, sometimes very successful. Sometimes there is a period of the time where I can't get a break. For a few trades. So I'd like to take a long-term perspective, zoom out, look at my entire life as a person or as a trader, and just realize that this short period of time, this specific Coke trade or the tire that blew out, it only happens in a short period of time. I'm probably not going to remember Coke or the tire a couple days from now. And instead of being consumed or attached to the event, I'm looking at the long picture and trying to stay focused on the trading system that I'm using. For the trading perspective, I'm using a system that I've been testing for the past 20 years. I know what the probabilities of success are, and that helps me to stay focused. Same thing in life. So zooming out, taking longer term perspective is very helpful. Some of the warning signs that can change your behavior when you do consume by these thoughts. You want to first be self-aware and recognize these thoughts. Label your emotions. When your tire blows out, you want to keep a journal and document it. That can help you deal with the emotional same thing with trading. Trading is just as important to keep your journal. And every time something happens and you consume by either hope or regret or fear, you want to label it and write it down in your journal and see if there's a pattern when you trade in of certain emotional state. Going through negative scenarios is very helpful when you see these warning signs. Some of the toolbox that I use is negative scenario review. Before you get into the trade, go and visualize the outcomes of the trade. Imagine you're looking into the future past FOMC meeting at end of July. See if the trade goes against you, relive the moment, and then when the moment actually arrives, the research shows that if you're prepared for the negative outcome and positive outcome, if negative outcome does come, you're less consumed by regret or fear, and you're more likely to move on without experiencing a lot of emotions. Referring to your trading plan and staying true to your trading plan, very important. Live trading room is very helpful for me. Every day in Tradespoon, we have a live trading room. It helps the Tradespoon community who are part of this to trade, bounce ideas with me. For me, it's also helpful. We together using research, together looking for signals, and using as a community. So peer trading support from your peer traders is very important. Can help you with your trading and emotions and empathy. Instead of being consumed by the trade that went against you, have a long-term perspective, long-term view, and realize that ultimately it's nobody's fault. There's certain decisions, FOMC events, interest rate decision, earnings that ultimately you don't have control over, and realize that this is nobody's fault and it's just part of uncertainty that you're faced. Part of the trading plan that helps me is finding the systems was statistics. Every time you trade, you should ask whatever the system you're using, whether it's Tradespoon or anyone else, look at the signals that's being generated. And when you rely on the signal, ask the system or the software to tell you what's the probability that of success when that signal is being generated. What is the probability that the trade will continue going in my direction or against me? And try to find trades that have high probability of success. For stop levels, I like to use 200-day SMA. For spiders and 50 days, those are the key support and resistance level that you should always pay attention for your stop orders. Structured trades with favorable risk versus reward. Hedge your portfolio with VIX, spiders, treasury, gold. Always have 30% of your portfolio in cash or more, and trade cover calls. So now let's turn our attention to the current market condition. Looking at the Stock Forecast Toolbox, looking at this SPY chart for today. This is a 10-day prediction. This is the model that runs every day and makes key prediction for support and resistance for today. We're seeing right now market is trading right around 299 level. Model did a good job predicting that support. We briefly touched 299 and overhead resistance at 302 on spiders. For the next 10 days, we see negative bias for the market as we approach an FOMC decision. In terms of longer period of time, right? Just like in life, we zoom in on the chart, 10-day chart. Now we're zooming out and we're looking at 50-day prediction. So based on how much time you're analyzing, just like your lifeline, you might have different perspective. So now I'm looking at the seasonal chart, 50 days predictions. I'm looking not beyond 10 days now at the 50 days. Similar picture, I see 4 predictions are lower. Going into accuracy, the system says that 80% of the chance that when 3 or 4 predictions point to the same trend, downside, then 80% probability that the trend will remain negative. On average, the prices for the next 50 days will be lower than they were last Sunday. So looking at S&P Mini, this is a September contract. We've reached yesterday briefly at 330 level, currently touched at 3,000. That's probably close to 50% retracement between 2975, which is a support. 2970 is a support right now, and 3030 is the overhead resistance using S&P Mini September contract. And we're at 50% retracement. I think around 25% of the companies already announced earnings. 10% of them beat earnings estimates. I think up until July 30 and 31st, we will trade in this range. Looking at, again, zooming out beyond current 50 days, looking at the Microsoft chart, just like looking at the lifeline of a person, which is very comparable. Microsoft, since 1990, continues to go higher. There are definitely periods of the time when the Microsoft is down. There are different months where the Microsoft is down, but if you zoom out and look over a long period of time, great stocks that you do invest do continue to go higher over a long period of time. It is true that short term you might get some downward movements, but just realize that just like trading, your life, the short period of time is just a small fragment from the entire spectrum of your life, and you should concentrate on a long-term picture of the stock or life or your trading plan as opposed to be consumed in a short period of time when the trade or life events do go against you. So I encourage you to register at YellowTunnel. Uh, you can go view the webinars and free commentaries. We just posted a commentary that you planned for this on July 23rd. I encourage you to review it. And that's all I have for today. Thank you very much for listening.